Let's find some day trades, swing trades, and option trades. Hello, everyone. It is Friday, May 29th. We're about 2.5 hours into trading right now. The market's been pretty boring. Everybody's waiting for the press conference that's going to be held by President Trump. China is in the crosshairs, human rights violations, increased control over Hong Kong, coronavirus, cover up, intellectual property theft. Everything, you name it, throw it all on the heap, and there's probably going to be some pretty sour rhetoric coming out of the president. The market doesn't like uncertainty, especially when we have a fairly fragile economic recovery that is yet to get underway, and now you're going to start a spat with China. And Congress is actually behind the president on this. You can see that in the House vote that took place recently, mainly on the human rights violations. So, probably going to weigh on the market. So if we take a look at the price action today and yesterday we had this gap higher and then the market continued to rally all day. Very, very strong price action. When I did the video yesterday, I said, there's just not a lot of volume behind this. There's not a lot of momentum behind this. I really feel that we're going to see a pullback sometime in the course of the day. And that's exactly what happened. But it took the whole day for that to unfold. And you can see here that this upward sloping trend line was violated about 2 hours before the close. There is a bearish explosion alert, and we're going to ignore that right now because we want to go back to the market. And so we had a 1OP bearish cross right in here. That was a nice cross. We had some selling. And this is where, so the selling was already starting to happen before the news of the Trump press conference that's going to be held today. But as soon as that hit the wires, that's when you could see the heavy selling come in. But it wasn't really that heavy. This was more of a seller's boycott than anything. Just floating higher on no volume. So it wouldn't take much to topple the market. That's exactly what happened. We had a nice big sell-off into the close. The market actually closed below the open, which is kind of bearish because that leaves us with a bearish hammer on a daily chart that you can see right there off of a relative high. And we have follow through selling today. Does that mean I should buy puts, Pete? Does that mean I should buy puts? Is it time? Is it time? Should I do it now? I get these questions every day. Everybody's looking to short this market because they feel that the market is overvalued right now. I tend to agree with that. I think that good news is priced in. I don't think that the recovery is going to be as robust as everyone thinks. It's going to take time, but I do think there's some pent-up demand. We cannot short this market until we have major technical breaches. The first breach would be the 200-day moving average. The next one would be the 100-day moving average, which I actually feel is more critical because that 100-day moving average at SPY 295.53, that starts to break down this horizontal, used to be resistance, now it's support, and with every passing day, this upward sloping trend line comes closer and closer to that 295 level. You can see that it connects these two lows right in here. So that 295 level is very critical in my opinion. Until we break below it and close below it and have follow through the next day, I don't think you can short this market. I think that asset managers are erring on the side of being long. They're forced into equities because they can't make any money in fixed income. Those yields don't even keep pace with inflation, so they're generating negative real returns. So why not take a chance? Why not be in the market? Why not see if the recovery actually does happen? For crying out loud, you got fiscal stimulus all over the place to the tune of $6 trillion. You've got the Treasury saying, hey, we can do more than that, but we're going to hold off. You've got even Mitch McConnell saying, yeah, we're ready to do another stimulus plan, maybe another $800 billion. You have $800 billion in stimulus by the EU. You've got $1.1 trillion in stimulus announced this week by Japan. So there's a ton of money backing up the market right now. Central banks are engaged in quantitative easing. That is a gigantic safety net, so asset managers are not worried about a huge market sell-off. They're going to wait and see how this recovery plays out. I think on a valuation basis, stocks are a little bit stretched, but we probably won't see any kind of concern in that until we get Q2 earnings. Now, every CEO has said Q2 is going to be worse than Q1. I think the market would do well to tread water right here for the next 2 months. As that happens, we can start to gauge what consumer demand has been. Are people out spending? Is there pent up demand? Are they ready to resume their normal lifestyles? Are they worried about what their job security might be once the PPP stimulus runs out? These are all questions that we have to answer. So, what that means right here and right now, and this is a critically important message, your overall risk exposure should be minimal. Minimal, minimal. At most, you should have 50% of your account allocated to the market. You should have at least 50% in cash. I am trading smaller size. I'm trading half size today. This afternoon, I'll probably reduce that to quarter size. There's no market momentum. Yes, we had a nice little breakout here. Could be a little bit of a buying climax before the market does roll over, but there's really nothing going on. The volume is very, very light. And you can see that in the course of the last 2 months, we really haven't traveled that far. Everybody's waiting to see how all of this plays out. So you need to do the same. Go to cash, wait for clarity. So I hope that I make that abundantly clear. This is a low probability trading environment. Back in here, yeah, lots of great trades. Oh my God, we were so active during this whole market decline and during this whole bounce right in here. That is the meat of the move, and that we have already captured. So everything from this point on is going to be very tough sledding. You're going to see stiff resistance. You're going to see small, choppy market moves. Look at these market moves that we had today. I'd love to go back. Let's do it because I really don't have a lot that I want to show you today from a trading standpoint. And I know that a lot of traders, novices especially, they're always full tilt, full tilt, full tilt. The account is maxed out all the time. Well, if that's your trading style, then unfortunately, you're going to take some big hits in this low probability trading environment, and you may not be around until the fall. What you have to do is you have to approach this much like a professional gambler, blackjack player who counts cards and he waits for the probabilities to set up. When the probabilities are high, he steps up to the plate, he increases his bets, and he goes for it because he knows his chances of success are very high. The rest of the time, he's just monitoring the cards, he's counting them, he's waiting for those opportunities to set up, and he's keeping his bets very small. That's exactly what you need to do. So look at this nice, beautiful, massive rally that we had on Tuesday when the market opened. Lots of optimism that the economy was going to be going gangbusters, states that were reopening, people were out drinking and partying and getting back to normal. We had a decreasing count in new coronavirus cases for the states that had been open. So that was good news. That encouraged other states to step up their reopening efforts. But look what happened during the course of the day. And a market pullback, another little market dip right in here. Everything's still okay. We're still able to hold most of those gains. Everything looks fine. And then we go into the afternoon session on Tuesday, and selling out of nowhere. Take out the low of the day, start to fill in some of the gap. That's okay. We came in Wednesday, another gap up, right up to the all time high. Didn't hold at all. Sell, 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 sell. Lots of selling pressure, but we came in, almost filled in that gap, and then we start to rally. We get a nice rebound on Wednesday. We close above the prior high right here. So yeah, everything's looking really good now. Hey, look at this Thursday. We even blew through that high. We got up to SPY 307 before the market started to see some issues. And then now look, now we're starting to see late day selling, profit taking into the close, a lower close, and follow through selling today. So my point is, this is not a predictable market. It's all over the board. So when you hear me talk about doing bullish put spreads and selling them out of the money, you need to be very, very careful. Use small amounts of money. Do not place big bets. because the trades that I'm showing you have a decent probability of playing out, but the overall probability of success has changed right now because we have no market momentum. So I needed to spend a lot of time on that because I know a lot of traders, they are full tilt all the time. You should be in cash, waiting, watching, take some time off, enjoy the nice weather. You don't hear that from day traders too often. I'm still engaged in the market, even though I'm trading smaller size. What that allows me to do is I can monitor price movement. And so when I see an opportunity set up in another week or two, when the probabilities are more favorable, I'll know exactly what to do because I've had my head in the game the whole time. But my bets have been much smaller. So let's take a look at a couple of stocks. TCO is a bullish explosion alert. You can see how that stock's running. There's probably some news on it. I want to put up NVIDIA because that was a stock that I highlighted Sunday night in a video. And this is kind of a classic point. You know, the stock has been super volatile. If you stuck with the trade, 340 was our support level that we wanted to see hold. You can see the stock is above 340 right now. Those options should expire worthless today. If you're worried about the trade, you can take your profit, close her down. I think that trade is going to work out fine. But we go into the daily chart and you can see the type of volatility that we've had in the market. There's been a lot of rotation out of tech stocks. You had the trade come out here on Sunday night, and look at that drop that took place on Wednesday, but then the stock rebounded the entire day. I've mentioned how to leg out of spreads this week. If you're a swing trader, you really need to monitor the stock based on the closing price in the last 5 minutes of trading. That's when you make your decisions. Let the stock do what it's going to do during the day. If you're a longer term swing trader, focus on those closing prices. If you're a day trader, obviously you have to watch every tick during the course of the day. So I'm going to go into one of my searches. We'll take a look at some longs, and I have to favor the long side right now because we've got the upward sloping trend line intact. We have our major support levels intact on the major moving averages. We've got horizontal support at 295 intact. That 295 level is critically important, and you should use it as your guide. As long as we're above it, you can continue to sell some out of the money bullish put spreads. But if we break that level, I would start reeling those in because it might be a sign that the market is ready to roll over. So SPY 295. So I'm going to show you some bullish trades today. By the way, I think that President Trump is probably going to have some harsh rhetoric for China, but there's not going to be anything actionable, meaning there aren't going to be any sanctions immediately placed. It's going to be a warning shot over the bow. He doesn't want to have the market roll over. I think that he's going to play it pretty safe into the election. He's going to let them know that he's not happy with the way things are progressing there and that there are human rights violations and that there could be sanctions placed. But I think he's going to try and keep the market intact. I think that he wants this economic recovery to take root before he starts casting a bunch of uncertainty. That's just a guess on my part. We'll see. I can also tell you that the tariff talks and the trade sanctions and everything that we've seen over the course of the last 2 years ago, that trade talk was a killer for the market. They would hang on every single word that he would speak. But by the middle of last year, didn't really matter. Trade sanction this, trade sanction that, really started to not have an impact on the market. People were pretty numb to that news. So there's nothing really for the market to trade off of right now. We're in a wait and see mode. That's what's going to drive the temporary price action right now. We're probably going to get a reaction off of it. We might trade off of it next week a little bit. This is a choppy environment. We're waiting for clarity. We're waiting to see how the reopening goes. We're waiting to see how consumers respond. So there are going to be herky-jerky price moves all over the place. Keep your risk to a minimum right now and save your powder. Keep your powder dry so that when we've got a high probability environment, you can ramp up and you can hit it hard. So Enough said. Let's take a look at some stocks that are interesting, that look good from a long perspective. All I'm going to do is I'm going to click on Pop Bull, and we're going to go through some charts. You can see this is a nice breakout on big volume through this horizontal resistance level. We've got the 100-day moving average intact here, so it backed off steadily from that. Interesting. I like the volume. Could have been a decent play, but I can find better. Oh yeah, that's one right there. This has been on the list right from the open today, right at that price. It was on Pop Bull, ZS. Let's take a look at that 5-minute chart. Look at that run. And it still has a full head of steam. Pop Bull is my favorite option stalker search. Look at this, second on the list, ZNGA. I'm not giving you 50 stocks to knock through. There's what, 6, 7 stocks here? ZNGA, beautiful. A lot of strength, nice upward sloping trend line, new high, opens here. Once it gets through that high right there at that 840 level, it's a buy. I think you can get long there. Stock is currently up to 873. So really nice. 30-cent gain on a $8 stock. Oh yeah. CRWD. Nice relative strength. Let's put up that 1 OSI indicator. We can take a look at it. Orange line above zero, relative strength. It's been very, very strong all day. You can see on the daily chart, CRWD breaking out to a new high. Really good strength there. Snap. Really like Snap today. Now, a lot of the social media stocks are down because there could be regulations imposed right now that there's fact-checking compliance that's being considered for a lot of the social media outlets. So we'll see where that goes. But in any case, you can see this nice horizontal breakout. Stock is up near its high. It's got good relative strength. I think here you can lean on that horizontal support. You're not going to get much down on the 100-day moving average. So you're going to really have to try and lean on this support right here around the $16 level. Yes, you could probably try out of the money bullish put credit spread on this, but you're not going to get a lot of premium for it. But I like day trading SNAP. It looks really, really strong today. LOGI, nice breakout, but the stock is off of its high today, so it's struggling to hang on to those gains. Really big parabolic move on it as well, so not super crazy about that one. And SLV, silver, that also looks good. It found support at the 200-day moving average through horizontal resistance right here. Looks pretty dang strong. Decent volume coming in here as well. But if I had to take a pick out of some of these, I would have to go with Snap first because it's not too far out of the gate. And I like that. It's going to hit resistance up here at about the 1950 level. But I like Snap. It's a really nice looking stock. CRWD, nice little breakout there as well. This is the search, Pop Bull for swing traders. I almost forgot to mention yesterday the stock that I highlighted was HD. Let's take a look at that. You can see it's still right near its all-time high, trying to break out through this horizontal resistance. It pulled back yesterday with that market decline. You can see this is about where the video came out, really close to the high in here. Spent the rest of the day pulling back hard. And then today, it's actually had some pretty decent relative strength. You can see how the stock is above the close from yesterday, continuing to build. So, pretty decent shape. If you'd have bought this yesterday for an overnight swing, yeah, you're doing pretty well on it. If you'd have bought it anywhere in here, had to be a little bit careful on this with that type of selling pressure. So, what I would do is I would draw a downward sloping trend line here, and I would wait for that trend line to be breached to the upside if I were day trading it. So there was HD from yesterday. Look for very, very quiet trading today. We're going to see that press conference come out. I believe it's scheduled for 1 o'clock Eastern time. Make sure you check that time. Market probably won't do a whole lot until then. It's going to be a little bit spooked into the press conference, so I'm not looking for a rally until the press conference happens. Then the market could move either way. We'll see. So right now you've got us testing the low of the day. We have a 1OP cross, a bearish cross right in here. I would draw a horizontal alert line, and that would be my signal to enter short positions, but I'm not going to be doing a whole lot of trading. because there's just a lot of light volume chop right now. So I'm going to probably sit back, wait for the news, see what happens. Maybe there's a trading opportunity this afternoon, but I'll only be using a quarter of my size. The big takeaway today is that even though I show you trades every single day, you need to realize that this is a low probability trading environment. If you take those trades, you should be trimming your size way, way back from normal. Quarter size, half size, have at least half of your account in cash right now. Wait for the dust to settle. Wait for some clarity. Then when we get that pullback, we'll be able to evaluate what's going on, and then we'll be able to step up to the plate with some decent size once the probability improves. Thanks so much for watching. If you like the content, please give this video a thumbs up and sign up for the YouTube channel, subscribe to it, and turn on your notifications so that you never miss one of these videos. Let's see how that press conference comes out. I'll see you over the weekend. I'm going to be posting my swing trading video Saturday. You'll be able to go back and take a look at the swing trades that we placed Wednesday night. That video came out, so you'll have that to look forward to, and I'll probably try and do a video on Sunday night also. Thanks. Have a great weekend. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.